Yeah, that's a great question too. For me, I'm really trying to go after the professionals, the lawyers, the doctors, the dentists, but that's very difficult to penetrate. What's
Hmm.
super easy is investors that understand real estate as an investment. So the local real estate investment clubs and the online networks, what you're doing with the podcast. This is the kind of thing that works really well to raise money because they understand what you're doing. It's a much easier sell. The
Hmm.
problem is their sophistication level in this space is a little higher,
Yeah.
so they're demanding a little bit higher returns generally.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. Today we have Kevin Amolsch from Colorado. He's a real estate investor and lender, and we love to have him on the show and kind of ask him questions about the lending landscape, his real estate investing career. But before we get started, let me just read it, just a brief intro. Kevin is the founder of Pine Financial Group, which he started in 2008. He has successfully raised over $70 million in private money for his hard money deals and closed over 1,400 deals worth over $300 million. Did I get that close to being right?
Yeah, and we're closing so many deals, so it's even a little higher now since I sent that to you. But yeah, it's very, very good, very close.
All right, awesome. Yeah, I really appreciate you coming on and giving some insights. Our audience is pretty diverse, from new investors to seasoned investors. So we love to kind of hear your insight on your career. But would you kind of give us a little bit of background of how you kind of got started and a little bit about your story?
Yeah, absolutely, Dwaine. First, I want to say thank you to you for even taking your time to put this on. I know that it's not easy to put on a podcast like this and to invite the guests that you invite on. So I just wanted to say thank you and for
Absolutely.
inviting me onto it. So happy to be here. I'm excited to be here, share what I know. Yeah, I got started fairly young. I put my first house under contract when I was 20 years old. And I was learning about real estate while I was in the Army. I was reading books, the Rich Dad, Poor Dads, and all these things that most of us have read. And bought the house, moved into it, brought in a roommate, helped me pay my bills, and then I moved out of it. And then I decided to keep that as a rental. And here I am going to college, and I didn't need money for school because I was in the military. They were helping me with that. I didn't need a lot of income because I had the GI Bill and it was paying me every single month, and I was working. But I went out and I got a student loan anyways. I did that because it's low interest, tax deductible, all the benefits of that. I used that money instead of for school. I used that to buy that second house.
Wow.
And what I learned over those 2 years and the books I was reading and what I saw in my rental property was I was making money every single month without working very hard, and it was going up in value. And I was like, you know what? Real estate is going to make me rich. I just need to focus on this. Even though I'm going to school, my career is going to be real estate. So I knew the direction I was going pretty young. And then I started buying 1-2 houses every single month without cash or credit. And so that's kind of how I got started in my career.
Yeah, I mean, it's not, I would say, typical for people to latch on and find something like real estate and get started and become successful. A lot of times people bounce around, but you said that it kind of started you finding a book, or was there someone that kind of mentioned it to you? What kind of gave you that kind of pinch that say, hey, let me go look into this more?
Yeah, it was just the fight. I was reading about investing. See, in the Army, for the listeners that don't understand this, is if you are frugal, you don't need to spend any money. You could literally spend no money. So I was in the barracks. I was eating at the mess hall or the chow hall. I wasn't spending money on food, electricity. My car was paid off. So I was building up a little reserve in a bank account, and I could see that I wasn't making any money in the bank. So I started reading about investing, and what I saw was real estate over and over and over. What a great investment. What a great investment. So I tried it and I loved it.
Yeah, it's very inspiring because I kind of learned in the same way, just kind of, started latching on and reading different books and kind of got really inspired. So kind of, you said you got your hands into wholesaling as well. And how did those kind of started out, and how long did you take it to, and then did you kind of keep on to the rental properties, or do you still do it now?
Yeah, where I started in the foreclosure business, and I was terrible at it. So I learned how to negotiate and work with the foreclosures, but I wasn't very good at it. What I really had success with was the owner carries, like the subject to transactions and the lease option transactions. And so what I would do is I would tie up a property with some kind of owner terms, and I'd resell it to a tenant buyer, or I'd do a rent to own, and I would collect $5, $7, $10,000 down for the property, and I was using that basically as my income. So I didn't do a ton of wholesaling. I've probably wholesaled 10 or 15 properties in my entire career.
Mm-hmm.
I was mostly buying and holding, and then I would fix and flip occasionally as well.
What's kind of like one of the biggest projects you took on? Like, was it full rehab or just more cosmetical type projects?
You're talking about the early days, or
the early days?
Yeah, the early days. I had a foundation issue on one, and I didn't fix it correctly. So going back and redoing all that, lost a ton of money on it. That's a little single family house. My career has really grown since then, so I've been taking on much larger projects now.
Mm-hmm. So how did you get the transition over to the lending side? Like, what kind of say, hey, and any other, you could just say, hey, I could keep doing what I'm doing. I'm pretty successful at it. But how did you kind of get into the lending side? It's kind of like a different coin there.
Yeah, it's all real estate, right? But it is a totally separate business. You're right. Mm-hmm. I love the deal structure. I don't necessarily love managing tenants and managing contractors and all of that, managing partners. We talked a little bit before we started recording about that, Dwayne. What I really like is putting the deal together. It's the hunt, right? Trying to find the project and structuring it. And what I learned is the structure of your real estate transaction, the creativity behind all of that, is all about the money. It always comes down to how are you going to fund the deal. Mm-hmm. So I just fell in love with finance, the financing side of real estate. And so I became a mortgage broker, which was terrible. I had no control. And then I started raising private money and lending out that. Now I had some control. I was doing the underwriting, and I was making the transaction go between the private lenders and the borrowers. And I fell in love with that. And so I really started focusing on that in 2006. My partner and I split. I started Pine Financial in 2008, and here we are today.
Yeah, it's very interesting because, like you said, it's all connected in real estate. And in order for you to kind of get the deal done, you got understanding the underwriting part, which is very crucial. And the thing I like about you is that you came from the investing side, kind of learned about the ins and outs, and then came to the lending side. So you're, from your lending brokerage, you're able to offer so much insight and advice to, your clients and your investors coming from that angle. So I think that's very interesting.
Yeah,
so
I appreciate
you guys do, what is your company more focusing on, more on the residential, conventional, or hard money, commercial? Was it more like your bread and butter?
Yeah, we don't do any conventional financing at all. It's everything we do is private money. Mm-hmm. And so when you call our office, you're talking to decision makers. We originate 100% of our loans. We service 100% of our loans. So it all stays in-house in our offices here near Denver. We do mostly short-term bridge financing. So a lot of fix and flip financing, a lot of fix and refinances to hold the properties. It's a great strategy to buy a little single family or 1 to 4 units with using no money down. So we do a lot of that. We're getting a lot more into the commercial side now too, though, because that's pretty exciting. I'm not, my background's all resi. All I've done is residential my entire life. But within the last couple of years, I started studying and learning more about the commercial. And so now we're funding commercial deals. So we had a pretty exciting one out in Colorado, a northern part of Denver, suburb of Denver. It was this giant industrial park. Wow. And so it was a $5 million loan for us, and it, it had some CBD component to it. So there's the cannabis part of it, and I don't know much about that at all, but it was an exciting project to be part of.
Yeah, and just speaking just briefly on that with the cannabis, that's kind of is that legalized now in your state?
Yeah, and I think Washington and Colorado were the first 2 to go recreational. So it's been legal for several years now.
Wow. Yeah. Cause I'm starting to see a lot of listings come up that's talking about that field. And I've been talking to a few people that's been kind of mentioning that it's very interesting space. Not my cup of tea, but it's very
No,
interesting from an investor standpoint, but it's very high return numbers. I would say.
yeah, and you got to be very careful with it, right? Because they put up so many of these retail shops. There were more dispensaries in Colorado than there were Starbucks, and so now
Wow.
you're starting to see some consolidation and some of these going out of business, which is natural. It's very organic. You should see that, and the good ones are going to survive. But if you're throwing money at the bad ones, it's a little risky.
Yeah, exactly. So just kind of unpacking the lending side on the rehab side. So I started out my career doing the fix and flip and done, use hard money and private money and stuff. What is kind of your process as far as working with investors? They have to submit like a budget to you guys, and you have to do like a home appraisal? Like what's kind of like your whole process at your company?
Okay, so we have two primary loans if we're talking about the residential single-family fix-up properties.
Mm-hmm.
And I should say this before we get too far into it. We're only loaning in Colorado, Minnesota, and Wisconsin right now.
Mm-hmm.
So this business, there's some risk to it. And if I can't go out and touch the assets, I feel like I'm taking more risk than I want. So the expansion is very challenging throughout the country.
Mm-hmm.
So we're limited to those three. But the way to answer your question, the way it works is we want to get a pre-qualification done first. That's totally free. Once somebody is pre-qualified, we give them a commitment letter. They go out and make their offers. Once they land a deal, we need them to send in the contract and their scope of work. We have to know what they're going to do to the property so that we know how to value it.
Mm-hmm.
And our primary 100% rehab loan, we do get a full appraisal on it. So that's taken us about 2 weeks right now. And then we can close right after we have that. The other loan, it's just a 90% acquisition. We don't do any appraisals, no nothing. We loan 90% of the purchase price. They cover the down payment, they cover the rehab, and then it's just real smooth.
Yeah, because they got more skin in the game.
Yeah,
so
exactly. We're a lower loan of value. They have more at risk, so we feel comfortable.
What type of rates does it differ per deal? You guys kind of got like a set interest rate that you guys are charging typically?
Yeah, we have a set interest rate. It depends on the market, but not on your credit or the deal or anything like that. So in Colorado, we're 3 points origination, 12.9% interest on the rehab. We're 2 points, 12% on the 90% loan. And in Minnesota and Wisconsin, it's 4 points origination, 12.9 for the rehab, 3% originate. I'm sorry, 2% origination, 12% for the 90% loan.
Oh, cool.
I went through all that really fast, but
no, it's definitely it's very interesting. And then on the commercial side, more of the bridge lending. What's kind of like your process there?
yeah, that's going to be a deal by deal. It's based on the deal specific. We're at 2 points, 12%, and it's a bridge loan. So we are seeing this very frequently right now for, value add projects. So if someone needs to come in and get some rehab done so they can get more tenants in there, bring the value up before it's bankable.
Mm-hmm.
That's one of the main reasons we see borrowers come to us, or if they need to close quick. Conventional loans, bank loans were 45, 60 days on this commercial stuff. And we're still closing 2 to 3 weeks. It takes a little while to get the environmental studies done and that kind of thing. But as soon as those are in, we're closing.
Cool. As far as the market landscape with the interest rates and stuff, does that kind of affect your business? I know you guys do more private. It's more like deal by deal basis. Is that doing any type of effect on your business?
That's a good question, Dwaine. I get that question quite a bit. We were at 15% interest for years and years. It's only the last 2 years we've dropped it to 12 and 12.9. The reason for the pressure on the interest rates on our end has nothing to do with the economy, nothing to do with the Federal Reserve or the short-term interest rates, none of that. It's all about our competition. We've had competition come into our markets, which drove the price down. Fantastic for the consumers, not great for me, but it's all about the competition. It feels like, and I've been doing this for a long time, it feels like we're totally immune to interest rate fluctuation outside of our space.
Yeah, because it's just like you get these creative real estate investors, so you have different parts of your business. So it's like it seemed like something always going to be coming in compared to the conventional market where it's like it goes down, everyone is kind of moving up and down and ebbs and flows how it works.
Right. It's a totally different loan, totally different business.
As far as your investment partners, that you raise capital from? Like, how are you marketing to get investors and different stuff like that?
Yeah, that's an interesting question too. So there's a lot of regulation around raising private money. So you have to be very careful with this. If any of your listeners are out there raising money, I would strongly encourage you to spend $200, $300, $400 for a half hour, an hour of an attorney's time just to review what you're doing, because this is serious and people are starting to get in trouble for it. So for me, and the reason I brought that up is because you mentioned advertising. We call that a general solicitation in the securities world. You're not allowed to generally solicit for private money. You can't make an offer. You can't offer a return or a partnership or any of that to somebody you don't know. You have to have a pre-existing relationship with them, unless there's two types of ways you could pool money together and advertise, and they're pretty expensive to put together. So what we did is a Reg A recently. I'm not sure if you're familiar with that, but a regulation.
You got the Reg D and then you got the Reg A. Right?
Yeah, so the Reg D is much simpler. You go through a notification process with the Securities and Exchange Commission. So you just write up all your disclosures, send it off to the SEC. They don't even read it. It's just a notification, and then you got some limitations on accredited investors versus non-accredited and that kind of thing. But with that one, unless you're a 506C, which we could talk about if you'd like. With that one, you have to have the pre-existing relationship. So with mine, it's a Reg A. It's a public fund. So I could be listed on an exchange if I wanted to. Now that one is not a notification process. It's basically a qualifying process. You send everything to the SEC. They read it all. They do the red line. They send it back to you. And then it's a lot of back and forth to get your disclosures exactly like the Securities and Exchange Commission want it. And then that's the prospectus or the circular that you send out to your prospective investors. Now, the benefit to that, Dwaine, is that I'm allowed to solicit inside the states I'm approved in, and I'm allowed to say, hey, I'm going to pay you an 8% return, for example. And I'm allowed to take in accredited and non-accredited investors, and there's no limitation to that.
Wow. Yeah, that's a big advantage because, compared to someone just have to focus on accredited. Is there a difference as far as investment amount compared to the Regulation D?
No. In fact, I don't think that there's a limit on the Reg D either, unless maybe you could share with me if you know something that I don't. But
I just know that you can have like very smaller amounts with the Reg A. I just seen, just for examples, other syndicators that are raising like $5,000 or something like that.
Yeah, and I've seen as low as 500.
Wow.
I think that that's crazy. I think my minimum is 25,000, and sometimes I wonder if that's too low. And the reason I say that is because when you get to the lower amounts, especially dealing with non-accredited investors, now they're giving you their last $500 or last 5,000, and they're going to be so worried about it. They're going to be losing sleep, and you're going to start getting phone calls. And now you're managing investors instead of managing the project that's making you money. So the higher investment limit or minimum is going to weed out a lot of the high maintenance investors, and you're going to be dealing with more sophisticated people that understand your business and understand what you're working on and how you're accomplishing what you're accomplishing.
What type of makeup of investors is it? More like just people are passive investing that are like doctors, lawyers that just don't have the time, or they're also real estate investors that know exactly what type of business you're doing?
Yeah, that's a great question too. For me, I'm really trying to go after the professionals, the lawyers, the doctors, the dentists, but that's very difficult to penetrate. What's super easy is investors that understand real estate as an investment. So the local real estate investment clubs and the online networks, what you're doing with the podcast, this is the kind of thing that works really well to raise money because they understand what you're doing. It's a much easier sell. The problem is their sophistication level in this space is a little higher. So they're demanding a little bit higher returns generally.
Yeah, that's true. That's true. Besides from, you say, for example, podcasts and meetings, is there anything that you're doing specifically to educate investors and also bring in funds?
Yeah, I'm trying really hard to be approved to sponsor the dentists and the chiropractor association here in Colorado. I haven't been approved yet. For some reason, they're just like not wanting vendors or whatever. But it's a lot of adding value. Adding value is the key to marketing, whether you're trying to find wholesale deals, whether you're trying to find buyers for your deals, whether you're trying to raise money. If you could provide value, so put on podcasts and webinars and put out special reports and meet with investors and not don't have an ask on that first meeting. Try to add some value, and then they'll start coming in. And then always ask for referrals. Who else do you know that's looking for a fantastic investment like you're invested in?
Absolutely. As far as marketing to borrowers, is it also coming from those investing clubs, or how are you kind of attracting for your borrowers?
So we at Pine Financial, we do a lot of education events. So I'm going to go back to the adding value. We do a lot of classes and seminars. In fact, we have the largest real estate conference in the state of Colorado and in Minnesota. We get the most investors to turn out for that event. And
hosted by you guys?
Yeah, we host it.
Oh, cool. Very cool.
And it's one of those that it's like $20 to come. It's not, we don't sell education. So we're trying to pay for our costs and then just add a ton of value. And I wrote the book, and then we do blogs and newsletters and that kind of thing. So it's mostly the education route that brings in the most of our borrowers. And then we do some pay-per-click advertising on Google and Facebook.
Yeah, because especially you got the Reg A, you can do more broad, advertisement.
Yeah, for our investors. That's right.
All right, very cool. What we say, what's like for your lending, what's like, besides from, you said the recent industrial deal, is there any larger deals that you worked on recently?
The biggest loan we've ever done is about 6.5, just north of 6.5 million. So
Wow.
we've done 2 of those. One was an 18-unit townhome project in a premier location in Denver.
Wow.
So we funded the full construction of 18 townhomes. And then we just funded a 30-unit townhome project in a northern suburb, and it's a value add. So it was all built. He just needed to do some minor repairs to each unit, and then he's starting to sell those off. And that's a really cool project for him, because by the time he sells by the time he pays off the loan selling properties, he might own 5 or 6 of those townhomes free and clear. So now you do one deal and you end up with 5 townhomes free and clear. That's a pretty cool deal.
Oh yeah, absolutely. Well, that's a pretty cool deal. How did you originate that? Is it came through your network, your educational stuff, or previous contact?
Yeah, that's such an interesting. This is an interesting one. So the borrower on this one is a banker. And he's a real estate investor on the side, and he's been doing some projects like this. And he was turned on to this project because I think it's because his bank loaned on it at some point in the future. He knew us because Travis in my office, he does a lot of development deals as well. So him and I are always talking about different banks and where to get money. And Travis had worked with this guy on another project. And so he knew that we loaned private money. And this was not a bankable deal. It was a little bit more high leverage than the bank would go. So he called Travis, and that's how we got the deal.
Very cool. So like most of your knowledge, I would say, was school of the hard knocks, but did you kind of have any mentors to kind of help you along the way, or is this more like just keep educating and trial and error?
Yeah, good question. It was both. I was actually going to go there. I forgot about that. So when we talked at the very beginning of this podcast, when you asked me about how I was getting started, and I said I was into foreclosures and I was terrible at it, and then I got into the lease options and the W-2s. Well, when I made that leap into the owner financing, I did hire a mentor. So it was pretty inexpensive back then. I paid $5,500, and there was a 1-year mentorship program. And that's what really catapulted my career.
Yeah, it's very cool. Yeah, same with me. Had a mentor and I go to a lot of seminars, educational stuff. So anything I could find just to kind of give me that slight edge. So besides from doing like the lending world, I was also going to ask, how big is your staff? You have a pretty big staff?
No, we're lean and mean. I've got, there's 6 of us. There's 5 of us in Colorado, and I have 1 person on the ground in Minneapolis. So we could do quite a lot with a small team. We have 4 loan originators and 2 administration. And that's really what we need unless we decide to grow.
Yeah, definitely. And you can steadily growing over the years and stuff like that. So you're just more focused on bringing in more capital and kind of doing the relationship management with your investors.
Yeah, I'm more focused on making sure all the money is lined up and managing everything. And then my staff is so amazing. So they're really what drives the company.
Very cool. So besides from working, you did get any free time? I assume when you can. Like, what are you doing with your free time?
Yeah, I'm just now starting to work harder than the last, I don't know, 3 years. I've really been taking it easy. So I learned how to golf. So I've been trying. I'm terrible at that, but I'm really trying to golf. I like to snowboard. I'm a single father, so I have two daughters.
Oh,
I
cool.
have half the time. When I'm with them, I'm absolutely focused on them. So we're always out doing stuff, riding bikes, and so yeah, I have a pretty amazing life.
Awesome. Awesome. Yeah. So my next question was, what are you most grateful for? I would assume it's the two daughters that you have.
Yeah, I mean, I have so much to be grateful for in my life. The thing about gratitude is it makes your mood happy. If you think about what you're grateful for, your mood becomes happy, and then you're more successful.
Mm-hmm.
See, when you have a negative attitude, I know this is cliche and you probably don't want to go here with this podcast, but that positivity in your mind
Yeah.
creates wealth, and gratitude is the quickest way to feel that positivity.
Absolutely. Absolutely.
I see your
So,
family behind you. So
yep. So yeah, my family is everything. I engineer my business where I'm, working from home all the time. So I see the kids all the time. We eat dinner, eat breakfast, eat lunch, and I put them to bed. So just like those things is very important to me. Of course, making money, but when you have all those things put together, everything comes to you. So it's just
yeah,
very
that's
cool.
exactly right. Good for you. That's what matters.
Absolutely. And so, from learning all your stuff, doing 1,400 deals, and doing way more stuff, what's kind of like your routine? I know it's a lot of transactions, a lot of busyness. I know you have a great staff, but what's kind of like your morning routine that allows you to kind of, get that success going?
Yeah, the last podcast I did ask the same question. I do think that's an important question to ask. So my routine it's a little bit challenging because I have my girls half the time. So my routine is different when I have them than it is when I don't. But
Mm-hmm.
to try to simplify this, I'd like to get up and get some type of workout in very first thing in the morning. And I'll do that 4 or 5 days a week, something like that. After that, I cannot live without my coffee. I have this crazy addiction to coffee. So I grab my coffee and I'll read. Right now I'm reading it's a true story, but it's a novel. Oftentimes I'll read self-help books, try to always improve. After that, I'll get my girls up, get breakfast, get them out, and then I head to the office. It's the emails, and then there isn't a routine at the office.
Yeah,
We're
yeah,
always
exactly.
talking
Yeah.
about deals and things are always changing. But I think I'm looking at it right now. I think my task list that I do every single morning, I mean, I try to put this together at night and then I wake up in the morning and I prioritize my day. I think that's the number one best way to be the most productive with your time and your business.
Are you using like any type of notebook or any systems to kind of organize
Yeah,
that task?
I don't know. This is my system. Can you see it? It's just little
Oh,
cheap.
yeah, yeah.
I think these are like, you get these for like 30 or 40 cents. So
Yeah.
that's my high tech task list there.
And that's usually the best one because after everything else fails, you always have that notebook and you got to rely on that.
Yeah, and I feel really awkward without it. I feel more awkward without this little notebook than I do with the phone.
Yeah, exactly. So what time are you waking up in the morning? Is it like really, really early to kind of get things going? Because I got 2 kids and I have to wake up at 4. If not, like if I like wake them up, they're going to be downstairs, want to watch TV and I'm not getting anything done. So
That's so awesome.
really early.
So right now I get up at 6. My oldest daughter's going to middle school next year, and I think she's got to be on the bus at like 7 or something. Like
Yes,
the
sir.
time change from elementary to middle school here in this district is insane. It's like an hour and a half difference.
Yeah.
So my routine is going to change significantly after that. I don't know how that's going to work, but right now it's 6 a.m.
Very cool. So you're doing a lot of self-help books. Any one in particular? You said you read Think and Grow Rich. Is there any other ones that you can recommend to our audience?
Ones that really impacted me. So obviously Think and Grow Rich. I didn't mention that one, but that was one that I would mention. What I mentioned was Rich Dad Poor Dad. So those are
that's what it was. Yeah, Rich Dad Poor Dad.
there's those are the 2 staples, right? Everyone needs to read those 2 books for sure. But I really think the E-Myth was huge for me. So I did the E-Myth and then the E-Myth Mastery, and then I went through the coaching program with them. I think that might be a little bit later in your career. So for the listeners that are newer to the business, I would focus more on the technical skills. So I'd be reading more real estate related books. And then as you start making money, then you might want to focus more on the business side and trying to build it as a business.
Absolutely.
So the E-Myth is great, but maybe a little bit later on in your career.
Mm.
And now I really think negotiation and sales, it's like sales, marketing, negotiation, all of that is fantastic to read.
Absolutely. Yeah, you just kind of it's always coming up. You're dealing with people, relationships, and marketing. So you always got to keep sharp on that. So tell us about your book. Is it called 45 Day Investor? Can you tell us a little bit about what inspired you to write it, what's it about, and kind of what people expect when they can read it?
Yeah, absolutely. So the 45 Day Investor, you can buy your first property in 45 days or less with no money. I picked 45 days because that domain was available. Really, you could do it in much shorter time than that. So I mentioned to you, I was having a lot of success right early on in my career. Now I had ups and downs, and I've lost pretty much everything, and I had to rebuild it. But early on in my career, I was having a lot of success. I was really arrogant. People were asking me a lot what I did to have the success, and this is on a lot of the online forums, and I'd get cornered at meetings and that kind of thing. And I always want to help. I'm like, I really have a passion for helping people, so I'm always talking and trying to help them. And then someone suggested, why don't you just write about it so you could help more people? So I tried to write a biography of what my career had gone through, and it turned into a how-to book. But in that book is the scripts that I use, how I negotiate the deals, the specific strategies I've used to find the deals, and then all the forms and everything to get the deal done.
Wow.
So absent of an attorney to review the forms, which I think is important, I really tried to make the book one book you should be able to buy a house. And so that's what I did. It was a bestseller on Amazon for a while.
Wow.
It's 45dayinvestor.com. I think it's $8.
Cool. Yeah, that's all you need. $8 and you get you can buy a house, get started.
Yeah, that's all right. No
start
money.
Doing some very good deals.
I shouldn't say no money. I guess I should say for $8 you should pay for the house.
Yeah, you should be able to sacrifice $8 for some success. So yeah, I mean, it's been awesome. I love talking to people who have been investors and doing, other stuff and just have like that full background. And it just seems like you're just full of giving people advice and giving back. And we talked a little about the gratitude and the positive thinking. It just kind of just equates to being successful and just living a good life. And like I say, you're just a paramount to that. So yeah, I really appreciate it. You gave us a lot of advice on this call. And we look forward to speak with you soon. Is there any kind of last parting words that you give our investors as far as things that they can do to become successful and things like that?
Yeah, first I want to say thank you again for having me, Dwaine. It's so great to meet you. You're an inspiration to a lot of people, I'm sure, as well. So thank you for that. The last piece of advice I would say that your success, number one way to have success is your mindset. So I would focus on that, affirmations and just concentration and meditation. And your mind is more powerful than you will ever know. We will never know the potential that our mind has, the strength that it has. So I don't know where this is coming from right now, but I really believe that if you focus on growing your mind and concentrate on what you want, you'll get it.
Absolutely.
That'd be the last piece of advice I have for your listener.
Yeah, I appreciate it. So your office, you have 3 offices, and you said Colorado, Wisconsin, and where's the third one?
Minnesota.
Okay, cool. So, and what's the best way? How do we get in touch with you?
The best way is on the website. It's pinefinancialgroup.com. You can also call our office. The local number here where you'll get me or most of my staff is 303-835-4445.
Awesome. I really appreciate it. We encourage all our listeners to come check you out, especially if they're investing into your markets, as well as getting any educational advice. I know that you're on YouTube, you have a channel, and you're writing articles. So love to keep up with you, learn more from you, and to eventually connect with you as well. Thank you again, Kevin. I really appreciate you taking the time, and look forward to connecting with you soon.
All right, Dwaine, thank you.
All right, take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.